There is no such thing as one universal type of trading. There are many different approaches to the market. Each one varies in entry duration, tools, and even signals. In this video, we'll break down all the types of trading and explore the pros and cons of each. If you're here to dive deeper into the world of trading, don't forget to subscribe to my channel. I make these videos for you, truly hoping they will help you avoid unnecessary losses. Keep watching, keep learning, and soon you'll be trading like a pro. First, let's talk about scalping. How does this type of trading work? We are looking at a short minute chart. The trend is downward. Scalpers work with minimal stop losses. They open a trade every time the price reaches a zone where it's profitable to enter. They literally open a position every time they see a chance. Scalping usually happens on small time frames and trades don't last long. But this is quite flexible and depends on market conditions. You could open 10 trades on a 1-minute chart in 5 minutes or 5 hourly trades on a daily chart. Both are considering scalping. Now here's the thing. Scalping is the most demanding type of trading. Scalpers spend their whole day stuck to the screen, sometimes making hundreds of trades in just 24 hours. This requires enormous psychological effort and can lead to burnout. On the bright side, you don't need massive investments to get started. As you can see, not all of our trades worked out, but the ones that did brought us a solid profit. The next type is intraday trading. This is the most popular type of trading because it balances a small deposit size with manageable complexity. Sounds interesting? Let me know by subscribing to the channel. Every subscription makes me happy. How does an intraday trader operate? It's very simple. They see on the chart that there was a downward movement overnight, but by morning this movement started to pull back. During this pullback, we spotted a triple top. This is a reversal pattern and they use it to enter a trade. Then we waited and ended up with a successful trade. As you can see, intraday trading involves clear chart patterns that the scalper might not always notice on a 1-minute chart. Now, after the drop, they see a head and shoulders pattern. Let me draw it for you. Here it is, a clear signal that the trend is about to reverse. From this, we could easily open a long trade. Another one there. This is where we would open a buy trade. Intraday traders tend to stick to large time frames, though it's not a hard rule. However, technical analysis and risk management are crucial for this type of trading. Now let's talk about swing trading. I've got a perfect setup ready for you on a separate tab. Take a look, you'll see 3 trades marked with the blue numbers. Let's break it down. Why were these trades opened? Let's switch over to a new site and pull up the economic calendar on investing.com. It's right here. Let's set it up. First, I select the time zone, then hit +1. I remove all countries, then select 3 stars. Apply. Oh, I almost forgot. We need to set it for US. Done. Now let's choose the dates. I set it from November 1st to December 18. Let's check. The first date is November 7 at 2. Here's the date on the site and we see a report, an important one, right here. Our currency pair is euro and dollar. This news is positive for dollar, meaning the euro will drop. On the chart, they decided to sell, and the trade would have closed in profit. The stop loss here is small, but the profit is still decent. Let's move to the next trade on 21st. We open the website again and see another report. Where is it? Here it is, it's the same report, also positive, so we expect a drop. Check in the chart. And we would have made a profit here too. Finally, the third trade happened on December 6. Let's look. Back to the site, and here's their non-farm payroll report. This one is the holy grail for currency trades. After this news, there is always a drop in our currency pair, and it's happening now. The main thing in swing trading is to get in at the very start of a move. Then let the price pull back and jump back in. That's why we stick to tight stop losses. The catch with swing trading is that you need a decent amount of capital to make it work. That's what limits its popularity compared to intraday trading. But the next types of trading need even bigger budgets, closer to what we would call investments. If you're dreaming of big deposits and big profits, make sure to subscribe to my trading channel. You'll find hands-on advice there, including strategies just perfect for beginners. Now let me show you how medium-term trading works. This is a chart for Microsoft stock with a 3-month time frame. That is a must for this type of trading. Medium-term trading relies on higher time frames. How do they enter trades? Usually you trade in cycles of 9 months. I would open trades every 9 months here, and each time I would be making a profit. Let's zoom in. Here I would wait for a correction, check the news, and then buy again. Then I would wait for the next good moment and buy again. And I would repeat this cycle every 9 months. So the general principle is this. You buy for the long term, wait for a pullback, look through the news, and open another trade. And you just keep going like this. As you can see, to make good money in medium-term trading, you need a huge amount of capital. But on the bright side, it saves you a lot of time analyzing the market. Plus, the risks are usually much lower. And now let's move on to long-term trading, a type where you hold onto stocks for years. Now our screen looks more like something an investor would use. And let's take a look at First Republic Bank stock from the beginning. If you put money back in 2010, then after 13 years in 2023, your result would have been a total disaster. And 86% loss, guys. And yet, it seemed very solid. Bank stocks reliable with great growth at the start. But no one's safe from failure, not even the richest investors. That's why putting all your money in right away is a huge risk. You need to calculate it carefully and in detail. And that's what makes long-term trading so similar to investing. Of course, this kind of thing doesn't happen every day. Markets generally grow over time. This is why investors still exist and even manage to beat inflation. And let's check out another example. Now we are looking at a Bitcoin to dollar chart. The time frame is 12 months. And here the situation is completely different. It's obvious. If you had invested in Bitcoin at the very start, your profit would have been mind-blowing. Let's try reading this number: 3,555,239%. Or dollars. if you would only put in $1 at the start. This video turned out really packed with info. I hope it helped you figure out different types of trading. Got questions? Drop them in the comments. And don't forget to subscribe if you liked this video. Good luck guys, and see you!